Welcome to Simple Investing Secrets, your trusted source for valuable investment insights, stock recommendations, and strategies to help you achieve financial freedom. In today's video, we'll delve into the Bill Gates' top 7 stocks to invest in today. We're taking an authoritative look at the investment portfolio of none other than Bill Gates, co-founder of Microsoft and renowned philanthropist. Through the Bill and Melinda Gates Foundation Trust, Gates manages a substantial investment portfolio valued at a staggering $42.3 billion as of December 31st. In this video, we'll break down the key holdings and investment strategies employed by Gates, shedding light on his approach to wealth accumulation and philanthropic endeavors. So before we start, if you find value in this video, please support our channel by liking and subscribing to our weekly updates. Now let's get started. Number 1. Microsoft Corporation. Microsoft stands out as the top performer in Gates' impressive investment lineup. It makes up a significant 33.98% of the portfolio and boasts a staggering market capitalization nearing $3 trillion as of early 2024. Its one-year return has surged by nearly 60% as of mid-February. Portfolio managers slightly reduced the trust's allocation to Microsoft by 2.7% in the fourth quarter of 2023, likely a strategic move to align with the portfolio's long-term goals. In 2024, Microsoft shares climbed by 7.3% as of February 20, remaining competitive alongside its fellow tech giants dubbed the Magnificent Seven. Microsoft's $13 billion investment in OpenAI, the brains behind the popular ChatGPT AI chatbot, received a boost in February with the introduction of new generative AI training models and the launch of Sora, an innovative AI tool converting text descriptions into concise one-minute digital videos. Furthermore, Microsoft has integrated OpenAI's AI capabilities across various computing platforms like Word, Azure, Excel, and Microsoft 365, marking a significant strategic shift towards one of the fastest-growing technologies of the century. Investors, including Gates, have good reason to be optimistic about Microsoft stock. For instance, OpenAI recently announced an $80 billion valuation in mid-February. Microsoft's impressive net income surge of 33% and revenue growth of 18% in the latest quarter significantly outpace its competitors in the software industry, solidifying its position as a technology titan. The market value of Microsoft shares is $14.4 billion. Number 2. Berkshire Hathaway Incorporated. The Gates Foundation Trust has notably decreased its holdings in Berkshire Hathaway Incorporated for the second consecutive quarter, reducing its position by 11.6% in fourth quarter 2023. This follows a trend, as the trust had sold 2.6 million Berkshire shares, equating to a 10.4% reduction in the previous quarter. It's worth noting the long-standing friendship between Gates and Warren Buffett, the founder of Berkshire Hathaway. Despite Berkshire's historical performance in line with the S&P 500 returns over the past 2 decades, its recent year-over-year growth of 14.2% as of February 20 falls short of the S&P 500's 22% return during the same period. Another recent adjustment in Berkshire's portfolio was the reduction of its Apple Incorporated holdings by 1.1%, equivalent to 10 million shares, in fourth quarter 2023. This move left Berkshire with a 5.9% stake in Apple, valued at around $174 billion in cash. Apple now constitutes a substantial 50.1% of Berkshire's portfolio, leading to a necessary rebalancing, considering that Apple's portion of the portfolio increased slightly from the previous quarter. Given the defensive nature of Berkshire Hathaway's stock, it aligns well with the defensive positions in the Gates Foundation Trust's portfolio. Should economic challenges persist, Berkshire Hathaway serves as a reliable refuge during market downturns for prominent investors like Gates. As of February, Berkshire Hathaway comprises 16.8% of the Gates Foundation Trust's portfolio, with a market value of approximately $7.1 billion. Number 3. Canadian National Railway Company. Canadian National Railway Company has experienced a relatively subdued performance in 2024, yielding a modest 2.2% return to its shareholders thus far, while showing a more significant return of 12.9% over the past 3 months. Despite this, the Gates portfolio maintained its allocation of Canadian National Railway shares in the fourth quarter. The rise in oil prices, exceeding 7% since the beginning of the year and reaching nearly $78 per barrel, has exerted pressure on the railway's profit margins. In response, Canadian National Railway recently acknowledged its shareholders' loyalty by implementing a 7% dividend increase. On January 23, the company disclosed its fourth quarter results, boasting revenues of 4.5 billion Canadian dollars, 3.3 billion, surpassing analyst expectations, albeit with a slight decline of nearly 2% in revenues compared to the previous year. The Gates Trust has been a shareholder of Canadian National Railway since 2013, progressively accumulating a significant position in the stock over the past decade. Their stake in the Montreal-based company has grown from 8.6 million shares in 2013 to 54.8 million as of December 31, representing 16.3% of the total portfolio. Canadian National Railway holds the position of the third largest stock and offers a 2% dividend yield. For Gates, the Canadian National Railway provides a substantial element of stability in North America's thriving commercial train transport sector, with its expansive rail network spanning 20,000 miles, connecting the U.S. East and West coasts, as well as the Gulf of Mexico. This status quo is expected to persist for the foreseeable future. Analysts' outlook on Canadian National Railway stock is mixed, with J.P. Morgan's Brian Ossenbeck maintaining a hold rating and a 12-month price target of $121 per share, compared to Canadian National Railway's closing price of $128.01 on February 20. Scotiabank, however, holds a slightly more optimistic view with a hold rating of $128 per share, emphasizing a long-term perspective, with a market value of $6.9 billion. Number 4. Waste Management Incorporated. Waste Management Incorporated holds significant weight in the Gates Trust, comprising 14.9% of its total portfolio and ranking as the fourth largest stock component. The company's stock has experienced notable growth since mid-2023, with a year-to-date increase of around 14% as of mid-February and a remarkable 34% surge over the past year. Having evolved beyond its origins in waste removal and landfill management, Waste Management has emerged as a prominent player in the green energy sector. Its expanding network of recycling facilities and innovative landfill gas conversion technology, which transforms waste into a viable energy source, underscores its commitment to environmental sustainability. This not only benefits the environment, but also serves as a lucrative revenue stream for Waste Management, allowing it to profitably resell the gas derived from its landfills. Positioned as a dominant force in a recession-resistant industry with a commanding 24% market share, Waste Management demonstrated robust performance in the fourth quarter, achieving record-high revenue of $5.2 billion, reflecting a 5.7% annual growth rate. Furthermore, Waste Management intends to raise its dividend in March, marking the 21st consecutive year of dividend growth. Currently boasting a dividend yield of 1.4%, Waste Management presents an appealing opportunity for income-oriented investors in early 2024. The market's value is $6.3 billion. Number 5. Caterpillar Incorporated. Caterpillar Incorporated is currently experiencing a significant uptick in its performance. Over the past month, its shares have shown an impressive return of 8%, and over the last year that figure stood at about 32% as of February 20th. This surge in performance can be attributed to the approval of $1 trillion in infrastructure funds by Congress in November 2021. These funds bolster manufacturing, construction, and industrial activities, areas where CAT specializes. In its recent earnings report released in early February, Caterpillar announced an earnings per share of $5.23 for the fourth quarter, marking a notable increase of 35% compared to the same period in 2023. This surpassed analyst expectations of $4.76 EPS for the quarter. Furthermore, Caterpillar foresees its performance in the first quarter of 2024 to be on par with that of 2023. With an order backlog of $27.5 billion by the end of 2023, as indicated in the company's 10-K filing, Caterpillar is evidently rebounding from its early 2023 setbacks and positioning itself to capitalize on the improved housing construction market and the promising infrastructure projects in the coming years. Drawing parallels to Warren Buffett's investment philosophy, Bill Gates also values companies with consistent growth and dividend payouts, with a dividend yield of 1.7% and promising prospects in the infrastructure sector. Caterpillar is poised to outperform its competitors throughout 2024, making it an attractive addition to investment portfolios. Its current portfolio weight is 5.1%, with a market value of shares amounting to $2.2 billion. Number 6. Deere Company. During the latest quarter, the Gates Foundation Trust reduced its holdings holdings in Deere Company by 9.2%. Despite this reduction, Deere still represents 3.4% of the Gates portfolio, with a cash value of $1.4 billion in the fourth quarter. One of the main challenges facing Deere is its performance. The company's stock has been declining since 2023 and has continued to do so into the new year. As of mid-February, Deere's share price has dropped by approximately 11% year-to-date, with an 8% decrease in the past month. Although Deere received a slight boost in January with the announcement of a partnership with Elon Musk's SpaceX and Starlink satellite service to provide internet connectivity for its agricultural machinery, the company still faces reduced demand for construction equipment due to sluggish activity in the real estate and commercial building sectors. However, there have been some indications of improvement in the construction industry in the first 2 months of 2024. In its most recent quarterly earnings report released in early February, Deere experienced a mixed performance, with a net income decline of 11% to $1.75 billion for the quarter. Nonetheless, the company maintains substantial cash reserves of $5.1 billion. Analysts generally anticipate a recovery for Deere in 2024, with a consensus 12-month target price of $420.94 per share, indicating an 18.4% upside potential, according to tipranks.com data. Michael Schlisky of D.A. Davidson has upheld a buy rating on Deere, setting a $483 price target. On February 20th, the stock closed at $357.38 per share. Deere's dividend payouts have moderately increased over the past 3 years, with a current forward dividend yield of 1.65%. Deere remains a significant player in the reliable construction and farming industries, where demand tends to fluctuate, but typically rebounds over time. As of now, Deere represents 3.4% of the portfolio, with shares valued at $1.4 billion. Number 7. Ecolab Incorporated. During the last quarter of 2023, the Gates Trust did not make any transactions involving Ecolab, but the value of Ecolab stock has consistently risen, increasing by almost 9% in 2024. Ecolab aligns with Bill Gates' environmental priorities, particularly in its focus on sustainable energy solutions. Ecolab specializes in technologies and services that promote sustainable water management, hygiene, and energy. Analysts in the industry have varied opinions on the stock, with a consensus suggesting a hold position and a target price of approximately $223 per share, representing a modest increase of about 3% from Ecolab's closing price of $216.39 on February 20. The company has demonstrated consistent profitability, outperforming a significant portion of its sector over the past 9 years, according to Guru Focus. In the fourth quarter, earnings per share were reported at $1.55, marking a 22% increase compared to the previous year, with total revenue climbing by 7.3% to $3.9 billion. Full-year revenues for 2023 reached $15.3 billion, reflecting a 7.6% increase. Ecolab's strategic decision to enhance investments in digital technologies and artificial intelligence is expected to drive productivity and attract the attention of technologically inclined investors, including Gates. The company's broad customer base is another notable strength, particularly in sectors such as healthcare, hospitality, and industry, where its cleaning and sanitation products are in high demand. This diversification ensures a steady stream of revenue, even during periods of economic uncertainty, with a 2.5% portfolio allocation and a market value of $1 billion. And that wraps up our deep dive into Bill Gates' investment portfolio. Managed through the Bill and Melinda Gates Foundation Trust, it showcases a strategic blend of both traditional and emerging sectors. With a value exceeding $42 billion, Gates prioritizes companies with strong fundamentals, aiming for long-term growth and stability. Key holdings include industry giants like Microsoft, Berkshire Hathaway, and Canadian National Railway, alongside players in sustainable sectors like waste management and Ecolab. Despite challenges and market fluctuations, Gates' portfolio remains resilient, poised to weather economic storms and capitalize on emerging opportunities. For more insights on finance, investing, and technology, don't forget to hit the subscribe button and turn on notifications for our channel. Thanks for watching, and see you in the next video.